Hi guys, it's Steve O'Hare from Signal Centre, and this morning I'm running through a commodity weekly roundup. It's Tuesday, the 10th of December 2019, and we're going to take a look at oil, gold, silver, and also have a look at Bitcoin cryptocurrency. So we'll start off with oil. I'll start with the higher time frames and drill down to the shorter time frames to give you full colour on what I see from a chart perspective. Now, we are in a triangle formation, a symmetrical triangle formation in oil. This is containing price action and has done, if we look at it over the last 4 or 5 years. And we'll drill down to the shorter time frames to give you more color on this. But we can see at the moment, price action is within the Ichimoku cloud, which means it's very unpredictable, very volatile. And we're really looking for a break either side of this triangle, either break the upward trending support or the downward trending resistance. Personally, I've got no real bias. I can see prices being contained in this for another few months at least into the new year. And obviously, there's plenty going on the fundamental side of things with oil. We've got OPEC trying to cut the output from the OPEC nations and the non-OPEC nations. They agreed 5 million barrels per day cut, and that should support prices. It's just a case of whether all the countries stick to it or not. So we've had a little bit of indecision. We've got this double or treble bottom here. So prices forcing their way to the upside. But if we go down to the weekly time frame, we can see there's a shorter term resistance here above. This is coming in at 61.45. That's really the level to watch on the upside. We expect prices to be contained by this downward trending resistance line. And obviously you can see the supports here. That would form a break of that trend line, would also form a double bottom. A break of this horizontal resistance would form a triple bottom. So definitely some prices to watch above the $61 area. Currently trading 58.74, and we can see we've had this nice big weekly bullish engulfing candle. So that's positive for the shorter term frame. We're in this bullish channel higher. This has been since October. The bottom of this channel coming in at 56.52, and the top again up towards the $61 level. So nice supportive upward trending bias in oil. The 4-hour chart is above the Ichimoku cloud. We've got some buy signals created there, and that's holding nicely. So let's move on to gold. There's our bias in oil. Gold is a bit of a different kettle of fish. Now, obviously, this is a safe haven asset. I'll go back to the monthly formation that I put a lot of weight on. This is an inverse head and shoulders, and it is a complex inverse head and shoulders, which are very successful formations notoriously. So we'll look at see the breakout back here in June. We've had the rally up to 15.55, 56, and now we're getting the throwback. And the throwback I expect to be limited to around 13.65 to 13.80. We're holding at the moment above a key support level, which I'll show you on the shorter term time frame. But the formations are looking a little bit negative. We've got this indecision over the past 5-6 weeks. That's forming a bit of a bearish flag. If it breaks there, the measured move target in that bearish flag is a move down to 13.80. Again, that lines up with a 61.8 fib retracement, and also the previous level that we neckline level is coming in at 13.65. So that area is the area we're really targeting. Let's pop to the daily chart and we can see what's happened over the last few weeks. The 13.45 level held. We saw the rally up to 13.78.79, and we broke that last week, got up to 85, but either side of that, it was the days rejected that move, and we formed shooting star type candles, and this has been followed by, on the 6th of December, we got this nice little sell-off. This was on Friday, non-farm payrolls. We've had indecision to start the week, but really we're looking for prices to remain capped. So selling into rallies around there is the ideal scenario. But obviously we'll look for a break of, I think on an intraday basis, we're looking for a break of 14.59 today, and we'll expect to move towards the 14.45 soon. That's the real support level that we're looking at. The 4-hour chart, again, doesn't give a great deal away. We can get a nice little trend line coming in from the 14.45 low. That comes in around 14.55 today. So there should be a little bit of support there from the horizontal and from this trend line. A break there will really test the 14.45 level, and below there we think a fast move towards the 14.10 level. Let's take a look at silver now. Silver, the monthly chart, broke above this downward trending resistance line, and it's still above there, so it's holding. So on a monthly basis, there is definitely a little bit more to play out here. If we do see this reversed trend line broken back, prices breaking back below here, because obviously we can see price action was capped by the Ichimoku cloud on the monthly chart, and we could see further, well, another retest of the 13.93 level, slightly below there if you're looking at the other candles, anywhere between 13.62.5 and 13.93. Yeah, so a break of that trend line coming in at around 16.50, and we should see the downside move extend a little bit quicker. Shorter term time frame, the weekly chart, we've broken out this bearish flag formation, and we are looking for prices to move lower. The measured move target for this bearish flag, we measure from the top of the pole. Measured move target for that is down to 15.20. Again, this is around the area where you'll see Ichimoku cloud support come in, around about at 78.6, which is 15.42. So potential downside, we've seen this move break lower. We haven't really seen it in gold, so silver seems to be a little bit ahead on the commodity front, on the dollar assets safe haven front. Here we've broken below this support line at 16.65, retesting it again now. We're looking to sell into rallies on an intraday basis in silver. Right, let's pop across to Bitcoin. Monthly chart. We're in a bearish channel. We expect prices to continue to move lower. Real support coming in at 54.50 to 5,500. The weekly chart, we saw a nice break of the and a close below the horizontal support here. Prices bounced back nicely the following week, and we've just seen indecision since then. So again, the overall bias is to the downside in Bitcoin, and really looking for value areas to really sort of throw up that supportive levels. Again, around about the 5,500 to the 55.50 level is probably the area to look at. If we bring in the Fibonacci levels, we can see we've got a 61.8. We're trading around there now. 78.6 comes in at 54.27. So again, these are the levels, real levels to watch that I would class as support, but overall it's looking pretty negative. If I was to be ultra aggressive with it, I would see this as a reverse head and shoulders. We've had the throwback and plenty more to come. Measured move target for reverse head and shoulders would be from the head to the neckline and extend that lower, and that's not pretty reading. So we'll leave it there on the Bitcoin. Overall bias is bearish. Thanks for joining us. We'll pop back in next week where we're doing our last one for the year, and that should cover the couple of weeks over Christmas. Thanks very much. Take care.